Time for the latest earnings outlook now with Research Director Shiraz Mian. Well, fourth quarter earnings season is really just getting underway, and the bulk of the reports have not started funneling in yet. But it's a good time to talk with Shiraz Mian and just get an overview here. It's kind of the lull before the storm, as they say.
That's true.
Let's just sit here and see what you think about the way fourth quarter is going to shape up, at least as far as you can tell. This is probably the first time in this economic recovery that we are going to see earnings growth falling to single digits. Does that concern you?
Just the mere fact that growth expectations have come down, that does not concern me. And I'll give you a couple of quick reasons for that. Number one, as you mentioned, throughout this cycle, we have had double digits year-over-year growth rates. So at some stage, normal economic forces would take hold and the comparisons become difficult enough that the growth rates would decelerate and come down. That said, I will mention that my feeling is that the expectations have come down perhaps more than are warranted by ground realities. Now, China has been slowing. There's questions about how Europe is going to turn out, mild recession, deep recession, definitely a recession there. The U.S. economic picture has been unusually good over the last 2-3 months. So the overall economic backdrop for this earnings season is kind of mixed. Good domestically, kind of iffy internationally. We are kind of like quite deep in the earnings cycle. So some basis and justification for why growth rates would be low, but I think they have gone a bit too far.
Any way to tell yet what impact overseas economic conditions, especially coming out of Europe, are going to have on U.S. corporate earnings?
It definitely will have an impact. Keep in mind that about 40% of the earnings for the largest U.S. companies, which are captured in the S&P 500, come from abroad. Europe, Asia, Latin America, and Asia overall is good in terms of the growth picture, but it's unclear at this stage as to how China and its growth picture will evolve.
Yeah.
And pretty much everybody on the street is talking about a recession coming up in Europe. The best case scenario is a mild recession. It could potentially get quite worse in the region. So when you have about 40% of your end market going through such tough times, it is reasonable to expect that it would have some earnings impact. And that's primarily one of the reasons why earnings expectations have come down over the last 3-4 months consistently. More estimates have been going down than going up. So yes, this weak international environment is having an impact.
So might all of those potential headwinds out there cause some pretty decent volatility during this fourth quarter season?
It's all a question of expectations. So once you have expectations as low as we are seeing at current levels, then it gets a little easier for the corporate sector to jump through them. And that's the silver lining I see in this otherwise kind of a weak earnings period for the corporate sector. I think 3-4% or low single-digit growth rates, kind of moderate expectations on the margins front, modest expectations on the top line front. These are not terribly tough expectations for the corporate sector to get ahead of. So there will be volatility. That's been the name of the game that we have seen since the beginning of the cycle. In fact,
yeah.
But I have a feeling that the trend will be positive. I think there'll be more positive surprises in the corporate sector coming ahead of expectations, these very depressed and weak expectations.
Do you have a short list of sectors that may show some negative growth?
A whole bunch of them. In fact, let me
I was
just
afraid of that.
let me just add that. In fact, this fourth quarter, the growth expectations for the fourth quarter, we are seeing a very unusual thing that sequentially. The growth rate comes down into the negative territory. It's very unusual for the fourth quarter earnings to be lower than the third quarter. So current expectations are basically pinning it over there. Make your pick. Other than construction, energy, and the industrials, and a little bit in the technology, pretty much all are barely positive or in the negative. In fact, the basic materials is on a year-over-year negative. Sequentially, pretty much all the sectors are in the negative territory. And that's the if there's any silver lining, that's the silver lining. That maybe expectations are way too low. It's difficult to say it conclusively at this stage, but there is a fair chance that expectations may be too low, and the actual results may come ahead of them.
All right, well, we're going to check in with you throughout the season to see how things are shaping up. But if you want to check and see what Shiraz's latest thinking is throughout this earnings season on a day-to-day basis, then if you're not there already, go to our website, zax.com, and every day in his Ahead of the Market column, he will, I'm sure, have thoughts on how earnings season is progressing. And that will change every business day, so you'll have to check back frequently to get his latest thinking. With Shiraz Mian, I'm Terry Ruffalo.